To look at a couple stocks on my radar that I think you should be watching. Let's bring in Scott Bauer, the CEO of Prosper Trading Academy. He's joining us for a look at a few he's got his eye on. Scott, welcome. First,
thank you, Ben.
Thanks to you, a big day with the folks on Jackson Hole, the virtual meeting. First and foremost, I just wanted to check in with you and see if you were surprised by the hawkish tone we heard throughout the day from Bullard, Kaplan, and Esther George earlier this morning.
No, not really. It's a continuation of pretty much what they have been talking about the last few weeks or so. And I don't know what impact that's really going to have on what we hear out of Powell tomorrow. I think the market, as I've been saying, and as you and I have had these discussions, I think the market is set for the taper. Now, that doesn't mean that I think that we're going to have a taper right now, immediately, or even fourth quarter this year. Probably start well into, first, second quarter of 2022. But I think the market is really expecting that. And I think the market is primed for it. And, maybe we see a little bit of a pullback on it, Ben, but I think that we're in a good spot for it.
I would agree with that in many ways, Scott. And one of the examples of that, I think, is, for one, at the top of the show, we looked at the indices, new all-time highs as recent as yesterday in the NASDAQ and the SPX. That shows investors aren't very concerned about the taper. At least at this point, they seem to enjoy some of the Fed transparency that we've been able to benefit from, and they expect more to come here. But also, Scott, as you mentioned, again, with rates on the rise, inching up a little bit, we've seen banks benefiting. It seems to be kind of a best-case scenario for stocks right now. And again, not too many waves to create a bit of a stir here at this point. Let's talk about the banks and how a hawkish tone, very much supportive of financial stocks. You've got Goldman, I saw, to a new high today.
Absolutely. And the banks have been probably the biggest beneficiary of the taper talk. And of the last few months, you look at a Goldman Sachs that actually is up, about 220% since its bottom, last March. Then you look at a JP Morgan that's only, and I kind of say that with, half tongue in cheek, only up 100% since the bottom last March. And in a lot of what we've seen recently, the activity is because of the anticipation of the taper and anticipation of higher rates. I quite frankly think, as much as I love the banking sector and the big financials, I actually think, Ben, they've maybe gotten ahead of themselves a little bit here. Because, if you look at a Goldman, look at a JP, some of the other big money center banks where they have big trading operations, their trading revenues have been incredible and really propelling them over the last 12 to 18 months. And even if the Fed starts tapering now, what is that actually going to do to rates? Yeah, we may see rates, continue to tick higher, but it's very unlikely we're going to see, the 10-year break 2%, 2.5%, anytime soon. So I'm not so sure that the tapering is really going to impact, at least in the short run, these banks. I think they've gotten a little bit ahead of themselves.
Possibly, especially without that yield curve steepening, helping to give them a lift. That certainly has flattened off relative to what we had seen earlier this year. Scott, let's move on from financials onto a couple stocks that you've got your eye on that are set to report quarterly results that are attracting some attention here as we head into trading over the next a couple hours and the next day or so. How about Workday? Ticker symbol WDAY. Here you can see some of the results expected here. This is coming our way today on the close. 78 cents per share is what analysts are looking for, and $1.24 billion. What are you keeping an eye on in terms of what our viewers should be watching? And it looks like the stock's trying to get something going to the upside, still short of a breakout above 250. But this week, we're talking back to levels we haven't seen since the beginning of May.
Yeah, and you were just mentioning it at the tail end of what you were talking about with Burlington, where you said, that now the stock is kind of coiling and trading in a tight range here. Well, the same is really, can be said about Workday over the last 6 weeks, not just today, but over the last 6 weeks. And that, really lends itself to some complacency. And if I look at Workday over the last 4, 5, 6 earnings reports, the last, 6 quarters or so, we've actually seen some pretty decent declines after earnings. Now, the stock is holding above the 50 and the 200-day moving averages. We're at levels that we haven't seen for a while here, but I wouldn't be surprised to see a little bit of a pullback here down to maybe that 230 or 235 range where there is massive support.
Okay, let's move on. We'll keep an eye on the support down there in terms of, and as you mentioned here, this range is pretty well defined. it'll be interesting. I like it when I see an upper and a lower extreme as well defined as this, because it does give you something visual to kind of reference in terms of breakout, energy, follow through, or lack thereof. How about the stock that seems to be America's sweetheart throughout the pandemic? Peloton up to 171. We're talking to begin the year, but they've really come off since. And while they did find some support recently around the $80 level, another stock that's kind of sideways headed into earnings, but certainly a lot of anticipation headed into this one. I saw earlier in the week they rolled out one of their cheaper, older, kind of bringing back that original treadmill, it looked like. But what are you watching in terms of PTON as we head into here? You can see expectations for results today on the close as well.
Yeah, I think post-pandemic, Ben, whether that is a couple months from now, which would be very optimistic, or whenever that is, Peloton is here to stay. It certainly has been the darling. I really love the upside, but I'm pretty cautiously optimistic on this print here. They're fighting a lot of negativity in terms of what they had with the recall on the tread, some other headwinds coming into the quarter here. But I really like this stock in the long run. And I actually talked about this with Oliver this morning. I'm buying some calendar spreads here because I am cautiously optimistic about here. And I think we can get a nice move to the upside, whether it happens off of the print or whether it happens, down the road in a couple weeks or months here. I really do like the upside in Peloton.
Peloton had a nice run up. I mentioned the 171 high that we saw. We're talking, there are some of the highlights from it looks like a third quarter year-over-year revenues. And I do want to point out here again that the weekly time frame shows, as mentioned, that recent high 171 since we talked about some of the chop. But Scott, I can see why it does look like there's a bit of support here around this 90-100 area. I can see why you're somewhat bullish this one. And if we get some momentum back up through 130, 140, 150 area, it opens up the door for a retest to 170. We talk about this pattern and have been watching this play itself out on multiple products, multiple time frames. The run up, sideways consolidation, its acceptance of, its value forming, its overlapping and consolidation. And certainly it gives us, again, another stock with a pretty well-defined upper and lower extreme to watch here. Yep. Scott Bauer, thanks for giving us part of your Thursday afternoon, and a busy one at that. Scott Bauer is the CEO of Prosper Trading Academy. We look forward to seeing you back here in the near future. We're going to take a quick break. When we come back, my chart of the day.